How to invest in penny stocks for beginners. The National Stock Exchange is trotting ahead with measured steps, and one of its major moves is to lower NSE trading cost in futures and options and cash segments by 10%. This move is catapulting enough to make both the Bombay Stock Exchange and the new MCX Stock Exchange to re-examine their business models and rework on it. This step of the NSE is surely going to prove extremely beneficial for share brokers, traders and investors, so much so that every share broker is looking forward to invest in the NSE share. It is very clear that NSE's move to lower the transaction charges is definitely going to prove of great importance to retail investors. The transaction charges posed by Indian stock exchanges are by far the lowest amongst all the other exchanges of the world. But then, as a matter of fact, the cost of trading costs higher due to other statutory charges like stamp duty and securities transaction tax and stamp duty. While MCXSX still waits for the regulatory approval to host equity trading, BSE2 struggles hard to retain its 30% market share in cash segment, and meanwhile it's only the NSE that rules as the market leader in Indian mutual fund segment and cash and future segments too. It owns about 70% and 98% market share in cash and future segment respectively. The live stock market too has most of the stock market experts vouching for the success of NSE in the nearing future, as its present is already lusty bright, and the only competition that it might face would be from the upcoming MCXSX. So with huge competition striding in, the stock exchange world is likely to move a step beyond price attribution, as the investors and traders shall witness a storming fight between BSE and MCXSX on one side and NSE on the other, trying to attain more liquidity on their respective platforms. This move can cost BSE market a great deal if it didn't respond well in answer. After all, MCXSX is nowhere in the league as of now.